Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Wednesday, June the 5th, 2013, and here is today's After the Bell market summary brought to you by WallStreetTrading.com. I have not been able to make a video for the past 2 days, so I want to make sure I give you guys a good video today that you guys can use and compare with your analysis and just in general take a look at how we're viewing the markets in our side of town. If you guys recall, all right, we were talking about the SPY having some trouble, all right, and saying that if the market was to trade sideways after getting rejected from these key trend lines we had right here, the main trend line coming from this nice little upward channel that we had here in play from back here and that started in June and July that we broke down out of back here in October. All right, whenever you have a key trend line that's holding as a support for a long time, you want to make sure you keep that trend line in your chart. And then 2 weeks ago, that trend line acted as resistance on the SPY and we got rejected. So now we're trading at 161.27. The SPY, which is the S&P 500 index ETF, was down close to 1.5%, down $2.28. You can see we are now below the key short-term moving averages, and we broke below that key 164 level after chopping around it for a little bit and doing some shake and bake action right there. As you can see, they broke us below. We closed below it last Friday. Then on Monday, they gapped us up higher, sold us off, then closed on the highs. Then Tuesday, let's see here. On Tuesday, they gapped us up a little bit higher, then we rallied up, then they sold us down, and then today we finally got the break of this little pivot low that we have right here. So now everybody's asking themselves which way are we going to go? All right, is this a buy area yet or what? In my opinion, I don't think we have a good buy area yet until we come back to this little pivot level right here. All right, which is around 160. All right, if I'm not mistaken, on the ES that area. Well, on the ES we're looking for 1590 as a buy area. As far as the SPY goes here. Again, we're going to be watching that key 160 level. If we break below 160, then we have this key trend line that you could take from this little inflection low right here. All right, and then you're going to take that level right here. So one scenario that could happen is we sell off some more tomorrow. All right, and then maybe we close another down day, and then on Friday we have a little sell off, and we make a little reversal from some type of hammer after going against that low, or we sell off tomorrow, we get a bounce, we form a hammer, sometime tomorrow. So again, some more levels to work off of as well. This 160, let's see here, this 160.94 level, call it 161, also coincides with the 50-day simple and exponential moving average here. So another level to watch is going to be this 161 area, which we close right on top of it. All right, if we take a look at the ES, I'm not going to go the whole fiasco. I'm just going to show you guys what we have going on here with the ES. If you take a look at the ES chart, this is a daily chart. Let me zoom out a little bit. Sorry about that. All right, this was a nice little tight triangle that we called for a buy. All right, this was the jobs number Friday that came out. And once we broke out this little tight triangle wedge pattern right here, we had this nice overdone move to the top side, which has finally resolved, with some nice pullback action, which people have been looking for. So if we look at the area that we could get long the market for a breakout back test, that won't be down here, until this price level down here where we'll back test this trend line. That level is right at 1584. So we're looking for 1590, 1585 as a potential target, and that's if we break past this 50-day simple and exponential moving average on the ES, which is around 1604. All right, so, there's definitely some decent action in the markets here to the downside. We have our second consecutive lower close here, and we have our 4th consecutive close below this key 165 level, which was holding up, all through May and now has finally broken down here in June. All right, if we take a look at the triple Qs. Okay, taking a look at the triple Qs. The triple Qs are coming back into a key trend line. So maybe tonight we'll do some research on some technology stocks. This was a key trend line for a breakout that was acting as resistance. All right, until it finally broke. We got the breakout. I noticed the breakout on the triple Qs. The volume really didn't come in. That's a little bit interesting. Definitely going to keep an eye on that. The sell side volume has been coming in, but when we had that breakout, the buy volume was not coming in there. So that's definitely something that we're going to be paying close attention to. So as far as levels to watch on the triple Qs, the 7150 level lines up with the 50-day exponential moving average. Also lines up with our key trend line. That level again is 7150. The 71 level is the 50-day simple moving average. All right, and that's going to be around 7104. We also have this little gap fill right here on the Qs, and that level is coming in around 7145 or so. All right. And if we break that, you got 70-60. Then we'll give you guys some more levels going forward. The triple Qs did get some nice selling pressure once they broke below this key 73 level. And today we have our first close below that key support level that was holding up, for the past 2 weeks or so here. If we take a look at first I want to take a look at the NASDAQ futures. Take a look at our channel system here that we had when we called the breakout 3 weeks ago. All right, we did get rejected right at the top of our channel. All right, that key trend line you see right there that I have highlighted, we're coming back to that level right there. That lines up with, say, 2920 on the NASDAQ futures here. All right, and pretty interesting. We got rejected right at this little area right here where you see we had the little selling pressure in the channel, and the top of that little channel range, was respected. And, oh, come on now. Sorry about that. Was respected and acted as resistance right here. So some good analysis that we have going on over here. I haven't been able to do the videos like I normally do because I've been working on our education that we're going to be teaching starting most likely next week. We have a couple people signed up for the June class we're going to try to hold at the end of the month. Of course, we want to make sure we have enough people in the room before we do a full-fledged class there. So we want to make sure that we let you guys know at the end of June. All right, the dates that we're looking at are the 29th and the 30th. That Saturday and Sunday, we're looking into doing a online webinar. We have some people that are coming into our Miami office to sign up for the course, but we are also, of course, looking to help some of the people online that are interested in learning some of our analysis, some of our tips and techniques and strategies. So if you have any questions about that, send me an email at ccooper@wallstreettrading.com, and I can definitely update you on that as well. You can go check out our website, wallstreettrading.com, baby. So let's go and take a look at the IWM, the Russell 2000. All right, the Russell 2000 was down 1.28% via the IWM. This thing still has some more downside. One level that we're going to be watching pretty close is going to be this 95 level coming from this little inflection pivot highs right here that we had before we sold off. This little area before we sold off. Then we gapped up and we broke above it, and we've been going up ever since. So this 95 level is going to be important from that price action as well from the 50-day simple and exponential moving average, which are in the same area. All right, so keep an eye on that. The IWM is actually still hanging in there a little bit better than the other indices because we are not that far away from the breakout level or from the breakdown support level like some of the other indices like I showed you guys here earlier in this video. All right, so keep that in mind. What else? Gold. Gold has been, getting some nice action. Well, before I go into gold, let's take a look at the volatility index because the VIX, we gave some early 2 weeks ago. We gave some analysis on the VIX, telling you guys what levels to watch. All right, and we talked about the VIX trading in this nice little range between 1250 and 1350. Also highlighted the fact that if the VIX was to stay above this level, we could see some elevated levels. We had a little breakdown to the trend line, and then we had this little pivot high that was put in from these little pivot highs. All right, that was a clue that the trend was starting to change, and so far that has been correct. If you guys have been on our My Wall Street TV trading room, some of the guys in there, have been calling out some great shorts intraday along with me and my other partner that moderates the room, and we've been doing pretty well, staying on the right side of the market. And you can see some of our analysis again on our Facebook page, on our Wall Street trading page. And I should be back in tune with the videos here going forward, and I'll definitely make sure I put together a good weekend review video for you guys this weekend. Taking a look at the dollar real quick. I want to take a look at the currencies before I go over the commodities here. But taking a look at the dollar. The dollar did get some nice sell action off the highs. Looks like we were not able to break past this key trend line from the little channel that we had back here. All right, another thing that I highlighted to you guys in our video saying that if we were to break below 83.50, look for the dollar to break down after having a high base range off this little move that failed, and that's exactly playing out to the T. And we have been seeing some nice little dollar pressure. Some nice little buying pressure in gold off of this little dollar weakness that we've been getting here. And nothing real exciting. Gold is holding above this key 13. What level is that here? Key 1390 level. At the same time, we've pretty much been doing nothing for the past 1, 2, 3, 4 sessions or so. But if we were to break over 1420, we could get some nice action back to the top side around 1480. And if not, we fell, we come back down, we're going to be looking at 1380 and 1350. Okay. Uh, what else? Let's take a look at crude oil. All right, then once we're done going over these commodities, commodity stocks here, or sectors, I should say, or just commodities in general, we'll take a look at some stocks. All right, so crude oil has been going all over the place. If you guys been paying attention here, we've been talking about this key 92 level. 92 has been a level that has been getting bought up by these institutions or by somebody out there, and it still remains, that's still going on right now. Nice engulfing candlestick or a nice reversal candlestick on Monday from Friday's selling pressure. And if we get back above 94, we can see 95, maybe even 96. We'll keep an eye on this right here. Level you want to watch in the short term is back at that key 94 level, and then back down here at 92. All right, what else did I want to cover with you guys here? So crude oil. We didn't take a look at the gold miners. So I'm sorry, I should have looked at that after the GLD. So let's go ahead and take a look at the gold miners. Gold miners, they're trying to pick up some traction. They had a nice little day on Monday. Then they kind of been a little bit dead money yesterday. They did not have any follow-through day. They didn't have a follow-through day on Tuesday, and today they pretty much performed like a little crappy indecision candle doji stick here. So still need some more traction. Definitely if we get over Monday's highs and we break over these 50-day moving averages right here around 31, we could get a nice little pop to the top side as these things are oversold. The gold miners have been in a decline since August of 2011. And then they had actually, let me just go ahead and show you guys this here. The gold miners have been in a decline since the highs of August, or I should say September of 2011. They sold off. They got the little bounce back there in July of 2012. They rallied back up, got rejected at the supply zone at 54 back here in September and October, and they've been going down since. So they had one wave down, little pop up, and then another wave down. And now they're trying to catch some support around this area. So we'll be keeping a close eye on these precious metals to see how they unravel here. What else? All right, so let's go ahead and talk about some stocks. I mean, in general, the whole market was bearish today. We had the Dow Jones, which I should have went over this first, but we had the Dow Jones down 216 points. We had the Nasdaq down 43 points or so, close to 44, and the S&P 500 was down 22.5 points. If we take a look at the breadth on the market, we had 4,884 issues declining on the NYSE, Nasdaq, and the AMX, and we had 1,294 issues advancing on the NYSE, Nasdaq, and the AMX. So therefore, breadth was in favor of the bears today on a 4-to-1 basis. So we had some heavy breadth today in favor of the bears, guys, and that's not including after yesterday's little selling pressure, choppy kind of day I like to call it, that we had there. So we got to keep an eye on this going into tomorrow to see how we close with these numbers and these ratios tomorrow. We do have a key number coming out on Friday. We have the jobs number coming out, and this morning when we had the ADP, numbers coming out, they were not as good as expected, but at the same time, like they were saying on CNBC, they were not that bad. But the real big number, the big shebang, is going to be on Friday when we get the employment situation numbers at 8:30 in the morning. All right, so talking about some stocks here, starting off with Apple. I know a lot of you guys out there would like to trade Apple, so we'll go ahead and do some analysis on Apple. Apple was down close to 1% today, just chopping around here. Apple is really dead money right now. I mean, there's better things to trade. You can see the ranges are small. You want to be trading stocks that are making big ranges, just like the market is, and this stock is doing nothing. Nice little upward channel right here that could break down if we sell off, we continue to sell or get some selling pressure in the markets here. So keep an eye on this as well. But I wouldn't be trading Apple right now. Short-term resistance is right here at 457. Short-term support that we have some minor support down here around 435, 436. Amazon showed some relative strength today. It was actually able to close up $1.47. I've been talking about Amazon being in this nice little downward bullish sloping channel. I also talked about Amazon breaking out, pulling back, and holding that 50% channel line. And if you're interested in learning how to channel trade, I do have a channel trading course that we have here at Wall Street Trading. And, I've taught it to about, 5 people or so, and they like the course. So that's something you may be interested in as well. So Amazon looks pretty bullish. If we could break over 271, you want to be keeping a close eye on the options activity that goes on in this stock, I would say, here in the short term, because maybe it would consolidate a bit, do a little shakedown, then break out. And if not, if it does roll over, then we know we could watch this key 50% channel line again to see if we get a bounce like we did this time. So Amazon definitely a stock that you want to have on your A plus radar. What else here? The banks, they've been getting smashed here. JP Morgan was down 1.87%. Goldman Sachs was down. Talking about JP Morgan first, so the JP Morgan was down 2%, down $3.38 today, folks. It's on the 20-day moving average right now. If we were to break below the 20-day moving average, next support is down here at 155.31, and we have a lot of resistance, or some resistance on Goldman Sachs around 164. Sorry, I'm talking about Goldman Sachs right now. I apologize here. So Goldman Sachs 157.58, the 20-day moving average. Holding as support today. We got a little minor bounce off that level, but the next support is down here around 155 half or even 155, 154. So, and if we can get back above 158 half and hold, which is this little pivot high right here, that would be good. And maybe we form some type of upper base range. All right, we have to wait and see though. We do not want to just go in here and start buying these stocks and these sectors that have been outperforming the market just because we have a couple of days down. We want to see what levels they hold at and then look for some reversals on an intraday pattern like on a 15-minute or 60-minute chart and then try to establish a position. JP Morgan's at the 20-day moving average right here, just like Goldman Sachs at 52.67. Has some short-term resistance right here at 54 that we broke down. And if we continue to get some more selling pressure, the real support is going to be down here around 51 from this little consolidation range that didn't break out, but then we broke above it right here. It should act as support. And then that also lines up with the rising 50-day exponential moving average. All right, and then, of course, we can't talk about the banks if we don't talk about Bank of America. Bank of America was down close to 2% today. But the thing with Bank of America's actually has some decent support. Pivot high, broke out, act as support, back test, act as support. Got a nice little bounce off the level today. So 13 is really starting to be a key level on Bank of America. If the banks were to get a bounce on the market was to get a bounce, Bank of America is going to be a go-to stock, especially if the financials are showing some relative strength intraday. You want to be looking at Bank of America. All right, some energy stocks. ExxonMobil was down 1.26% today. It is coming back into that key trend line that we highlighted to you guys before from these little pivot highs right here. Then we broke out, had the back test that held, which was another opportunity that we told you guys was a buying opportunity. Rallied all the way from 90 to 93. Now it's back at 89. So it's another buying opportunity. Right now, we'll have to wait and see. If it continues to hold above this trend line and we just chop around from it, a little bit above and below it, then when we get a real market reversal back to the top side, which we have to wait for that as well, then we'll be looking at ExxonMobil as a possible candidate to buy that dip on it. But right now, it's you want to just continue to gauge it around these key areas. Lulu, another little retail stock here, a little bit of consumer discretionary analysis here. Lulu had a nice little break yesterday, pulled back in. All right, and just want to watch this stock. The reason why I've talked about the stock here is, one, because it showed some relative strength yesterday, but then I didn't even take a look at it today, and now that I look at it, it had some selling pressure today. But as long as this thing holds above 77, right, after breaking out this little bill flag action right here, this is another stock that you want to gauge while we're correcting to see how it acts around these levels. So then when the market does reverse, all right, this will possibly be a go-to stock to trade because you got the 77 level. Then, say it sells it down a little bit more, you got the 74 level to work off of right there. What else? Citigroup, going back to the banks real quick here. Citigroup, nice little break of this little accelerated trend line if you want some short side action. All right, and this is one of the financials that have broken below and closed below the 20-day moving average. Next support in the stock is down here around 49. We break below that. We have some support around 48.50 and then 48, which also lines up with these 50-day moving averages. All right, folks, so again, if you're interested in taking our education course, all right, which is going to be pretty good compared to the stuff out there, and we have a lot of our strategies and a lot of good analysis in those, a lot of good analysis and explanations, contact me at ccooper@wallstreettrading.com. Make sure you check out our website, and if you want to take a look at our trading room, on our intraday live trading room, go to mywallstreettv.com and type in the password SMART. If you want to have more than 14-day trial, make sure you fill out the form on the home page. Have a great evening, folks. Cheers.